Hi there and welcome to Indian Open right here on BloombergQuint. I'm Neeraj Shah and it's Wednesday morning and it promises to be a start which is quite unlike what the SGX was indicating the day before yesterday. But we have a full packed show, lots of conversations and lots of things to look forward to today. Devina, good morning. Least of all important, the least of one which is the most important thing is the IMF press conference as well, which is something that people will be a G20 press conference people will be watching out for very closely today.
Yes, Neeraj, and also the fact that while the last 2 days IMF has come out with predictions and the outlook for cuts in global GDP numbers as well as individual country-wise impact. India in the scale of things seems to be okay, I would say. Aside from that, the rest of the globe in terms of the equity market performance picked up. You actually had a gain coming in for S&P 500 that hit a 1-month high in yesterday's session. Nasdaq led higher by tech stocks and the predominance of that in the index. SGX Nifty too, while in today's session is absolutely flat. We missed out a 200 plus point rally in yesterday's session. So that needs to be covered up today, which makes us move past 9,200 odd levels on the Nifty 50. But earnings is something that you're going to be watching out for closely, and that's what we're seeing, because now once you are seeing cases coming off. As we've got Italy, which has seen the lowest number of fresh cases since March 13th. You've got Spain, which has seen less number of deaths. So all of those factors adding up to bring on some risk on trade back into the equity markets. But reportage of earnings, JP Morgan Chase had a poor quarter. You had Johnson & Johnson, which had a great quarter. So all of those will be impacting the mood and the price performances going forward. And similar is the case in our markets as well, Neeraj.
Yeah, just very quickly, I just want to mark what the Bank of America Merrill Lynch Fund Manager Survey had to say. The April Fund Manager Survey, the cash levels jumped from 5.1% to 5.9%, which is the highest level since the 9/11 terrorist attacks. Investors and fund managers are that nervous about the markets, which is why they're sitting on such high levels of cash. 52%, according to Merrill Lynch, 52% of the respondents said that the economic recovery will be U-shaped, and just 15% said that it will be a V-shaped recovery for world economy. Lastly, and the most important thing to my mind, is that 57% said that COVID-19 second wave is the biggest tail risk. I think people are not talking about that at all. If at all we would have a second wave of sorts, then that would put into spanner all of the recovery points that we've seen in the last few days. So interesting report and interesting observations that Merrill Lynch brings out from the fund managers, a large portion of fund managers that they do on the global side, Devina.
Yeah, in fact, many have been saying this, Neeraj, that if you have this getting further extended, further relapse of cases happening, once you get out of this season and how the next season brings about another case, if there are a few more cases and the impact of that. But for now, I think for the time being, at least, I think earnings will take precedence also in the backdrop of the improvement, if at all, in cases. But since we're talking about earnings, we begin our earnings season today. Vipra reports its numbers. Darshan is joining in right now to take us through what the street is expecting from quarter four. Darshan, good morning.
Good morning, Devina. Not too much, at least because of the lockdown that we've had, at least for 1 month or close to 1 month, depending on the state that you were in. There were a lot of issues in terms of these numbers. So a couple of one-time factors that will be affecting this time around. Production loss will be there due to the lockdown. This time around, both domestic and international sales will be hit, given the fact that a lot of countries overseas have also implemented lockdown, and we also had a lockdown here. The rupee currently is trading at a record low against the dollar. So that probably will impact a lot of companies on the IT space and the pharmaceutical space. And for auto, obviously, there could be a one-time loss that several of these companies could do because of the BS6 norms that could come in. So individually, IT, obviously, it benefits because of the rupee, but because of the travel ban that is there, that will hurt the deal ramp up significantly. Now, what would aid the margins this time around? Travel costs are lower, the general selling expenses are low. rupees in the favor, that will aid margins. But I think if you're looking at globally what's happened, three of the global companies, that is Accenture, SAP, and Cognizant, have cut guidance. So guidance will be most important. Auto industries will be very weak. Plants have been shut down across the board. Muted sales have been seen despite the steep discounts of the BS4 vehicle, and inventory adjustment for transition to BS6 will definitely impact the auto sector. As for aviation, most of them have seen grounded airlines. The recurring expenses will impact them significantly. The only silver lining is crude, but when planes can't fly, that also can't help you much, except for a tiny bit of percentage increase. Oil and gas obviously will be weak this time around. Lower prices will hurt the upstream players, and sharp drop in demand will hurt the downstream players. And there will also be an inventory loss that we can see on the downstream players. And on the larger front, power, because of the lockdown, there is an impact on power sector. But the only relief is that the raw material costs have become much lower, so that would partially aid them in terms of their margins.
Darshan, what about capital goods and some of the other labor-intensive sectors like construction and mining?
Yeah, so capital good hasn't ticked in for a long time, and it will be the same. Execution will be weak. New orders are simply not coming in. Some of the companies like Siemens and ABB, which import significantly because of the rupee appreciation, there could be a hit as far as their margins are concerned. Metals and mines, yes, it will be weak because globally commodities have crashed significantly. Realizations have fallen significantly. The only benefit is that the steel companies may be better off than peers because domestic steel prices have been rather resilient compared to the global steel and metal prices. Cement, while Jan and Feb were very, very strong, and that was the way you could see the pricing could come in. Construction shutdown from March will impact demand because real estate is down, infrastructure is down, input cost is cheaper, so that probably will aid them. As far as real estate is concerned, nothing much will happen. There is a complete construction ban right now. Vacancy for commercial real estate, so paper companies like DLF, Shobha, Purvangara, or the brigades probably which have a higher commercial. I'm not have a higher commercial real estate portfolio. They may be hit, and people having a hospitality and mall portfolio will be hit. Some bit of green shoot probably may be seen on the export-based agri companies, but domestically, whoever has exposure to automobile, consumer durables may hurt. Banks obviously will be rather stable. The moratorium on repayment will be watched. Large banks probably will do it much better than the smaller peers. And lower operating growth will be seen due to the lockdown. And on the NBFC side, all of them will be hurt. The AUMs will be hurt. The cost of financing will go up significantly, and that's what you saw on the commentary for most of these NBFCs.
All right. What about this, the pharma space? I mean, that one has been fairly active and positively for that. Does the Q4 reflect that according to you? And what happens to the discretionary basket as well?
Yeah, so for pharma, I think pre-buying before the lockdown significantly helped them. So that is there. The rupee is in favor. So some of the exporters rupee depreciation, is in favor. So some of the domestic guys who have a lot of exposures will benefit. But there will be fewer approvals, keeping in mind muted growth. Hospitals and diagnostic, probably all of them will take a backstage, given the fact that people are simply not going out to hospitals and diagnostic centers. For FMCG, the essential goods will do well, but and for them, the lower commodity may aid them. But the staples will do that, but the discretionary spends will come down significantly. For the entertainment side, be it the multiplexes, be it the hotels, all of them will probably have a big problem this time around. Probably telecom will be better this time around. The price hike that they had taken will aid revenues, and margins are also likely to increase this time around.
Okay. We will watch out for all of these. Darshan, thanks so much for putting that into perspective. Earnings would be center stage. Pankaj Pandey joins in with his thoughts. Pankaj, good having you. Thanks much for taking the time out and speaking to us here. IT kicks off the earnings season with Wipro and TCS slated to come out over the next couple of days. What do you anticipate after what Cognizant has done? Do you reckon anything in the results or the commentary can heave a positive surprise for the IT names?
So, good morning, Neeraj. I think on the IT side, So, for example, for Wipro, we expect that the company would grow its revenues on a flattish basis. So, quarter on quarter, we are not expecting much of a growth, and then we'll have a currency headwind of 0.2 odd percent. So, rupee revenues though might grow at 1.2 odd percent. Margins could also expand. But I think the only or the bigger challenge is that we still don't know any. In fact, we are not very sure whether the companies will be able to guide in this particular quarter, because at client level disruption can obviously will be the biggest concern. I think it's still sort of early days in terms of figuring out the kind of damage it will do. But only thing is that some of the IT names, especially on the defensive side, for example, Wipro and even for example Tech Mahindra have are available below 10 times P. So which is where I think given that most of the IT companies have got a good balance sheet. So for them, I think navigating through these challenging times would be relatively better than a lot of other packs. So from that perspective, IT can be looked at, and Wipro and again Tech Mahindra, we have a buy rating largely because the valuations are sub-10.
Okay. When you start off with the earnings season this time, Pankaj, where is it that you're expecting most damage?
So I think this particular quarter, we will not see the extent of damage. What we have seen or what our sense is that except for FMCG and pharma, wherein we are not expecting damage to happen. In fact, even for next 2 years, these are the only two sectors where you'll see growth happening. I think the rest of the other sectors, we are sort of penciling in a single-digit kind of a decline in overall earnings. Now, for a sector like, say, multiplexes, real estate, or construction-related sectors, I think the challenge will not be there on the earnings. One has to sort of really focus on what happens in terms of their cash flows. Because our sense is that a lot of big companies are sort of stepping up their efforts in terms of showing liquidity. Now, worker is something which you cannot sort of touch because of the government dictate. So from that perspective, the only option available for them is to sort of lower or reduce vendor payments. I think that will be a bigger challenge which one needs to sort of watch out. So PNL definitely is going to get disrupted for a number of players, but I think it is on the balance sheet one has to sort of clearly focus on for the next 3 to 6 months in terms of what kind of liquidity mismatch can happen. And I think all these sectors will witness some bit of a liquidity mismatch. The extent is yet not known.
All right. Lots more to talk to you, Pankaj, but it's also important to get in a sense of all the stocks that we're watching out for this morning. We missed out on trade yesterday. A lot of news flow. Nikki is joining in right now to run us through all the various stocks and news. Good morning, Nikki.
Morning, Devina. I'm going to start off with Metropolis Healthcare, where Carlyle is looking to sell around 65.5 lakh shares via block deal. This could be around 13% equity stake that could be exchanged. Overall, as per the December shareholding pattern, it's a 14.8% stake that Carlyle held in Metropolis Healthcare. The floor price has been set at a 17% discount as compared to the previous market price. We're also looking at a bunch of other diagnostic stocks like Thyrocare and Dr. Lal Path Labs after Supreme Court decided that the testing in private for COVID will only be free for poor. This was way against what people thought, that it's going to be free across the board, but now it's clarified that it will only be extended to the one which are economically weak. And we're also looking at aviation stocks right now. Pain continues for these stocks. Said that all domestic and international scheduled airline operations shall remain suspended in tune with the nationwide lockdown, which has been extended till May 3rd. We're also looking at Irctc, where a railway ministry has said that cancellation of passenger train services has been extended to May 3rd, and the full refunds of fares shall be arranged to the passengers. So do keep an eye out on this one. And last in the list is Hindalco Industries, where finally the deal for Aleris acquisition has been completed by the subsidiary Novalis. However, in a bit of turn, the enterprise value of the deal has come up to an extent of $2.5 billion, which is a tad higher than what was estimated. Sorry, the enterprise value is $2.8 billion against 2.6, which was guided earlier. Essentially, it's on account of higher debt, and also because of the combination of Alris doing better than what was expected, and on account of that, the company has paid a performance-related incentive, which is now combined in the overall enterprise value. However, analysts don't make much out of it. They say that it's a good acquisition at this point of time, but at a very wrong time.
Yeah, Nikki, thanks so much for that. Those are the stocks in news, and some stories around these, particularly the Hindalco deal, would be there on our website as well. So do try and log in and read more about that. Pankaj, coming on the usual suspects, the blanket view would be that aviation stocks come airport stocks should be avoided right now. They've come off quite a bit, but the lockdowns keep on getting extended. People's choices of traveling might keep on getting extended. If you have them in your portfolio, would you exit? Would you advise exiting aviation stroke airport stocks?
So I think, Neeraj, on the aviation side, one is the immediate impact what they have taken. And I think the other aspect is that if in case the social distancing norms are in place post lifting of the lockdown, I think the entire business model needs to be sort of reworked, whether with a lower PLF or whether with a lower capacity utilization, can the companies charge higher and sort of maintain. So I think that's a big question mark. So from that perspective, aviation is something which have never been positive, and I think even with the current scenario also we will not be chasing. And in fact, somebody is holding. I think the advice would be to sort of exit. Largely because one, the government's support is still not there at this point in time because operating cost plus the aviation turbine fuel cost is still high. And in case of the government, especially state governments, do not cut the aviation turbine taxes, then I think the challenge for a sector like this will be far more. So you will have both P&L as well as balance sheet challenges for the entire sector. So my advice again would be to sort of exit these sectors.
Okay. Well, what to do then in a scenario like this? That's the question. Let's get in our experts on board to talk about the trade. Chandan Tapadia to kickstart the proceedings. Chandan, good having you. Thanks much for taking the time out. What's your strategy today, Chandan? I reckon the last time that we spoke, you mentioned that you see a move towards 9,500. We'll start off about a couple of 100 points higher, maybe. What do you do post that?
Yeah, very good morning. Yes, the way market has taken support at 7,500 and the volatility fell down sharply from its recent swing high of 86.60. We were expecting Nifty to head to us to 9,400 zone. And from last 4 trading sessions, the market is making it the higher lows. Even on the last trading session, it remained lower by 1.3%, but managed to respect its multiple support of 88 zone and forming higher lows from last 4 trading session. Technically, the index has formed an inside bar as from last 2 trading session. It has been trading inside the previous trading range. So that indicates some sort of consolidation breakout could be seen in the market. And that's why now the support for the Nifty index is shifting to 88, and upside we are expecting a move towards 9,300 to 9,500 zone. And for similarly Bank Nifty, however, that is still lower than the previous swing low, but 19,100 is the support, and because of the support, the Bank Nifty can head towards 28,300 and then measure medium-term hurdle of 21,300 to 21,500 zone.
Okay. What's happening about stocks, Chandan? It looks like there is much more activity if you can get the name right in terms of individually picking stocks. How would you position yourself in which sectors, which stocks?
Yeah, perfect. You must have noticed on last trading session when Nifty was down, but market bets was positive. And in last couple of weeks, we are witnessing the buying interest in most of the pharma, FMCG, and couple of sideline and the heavyweights counter. We have seen good formation of the bottom with a bullish divergence on the mechanical indicator, and short covering was also seen in many stocks. So again, it's a good market to pick the bottom down counter, which are having the overall strength kind of nature with the sectorial performance. So looking at the entire setup, we have selected to be with 2 ideas. First is buy on Bharti Airtel. The stock has given a consolidation breakout. 2 weeks back, it has negated lower top, lower bottom by formation of the inside bar on the weekly scale. 2 days back, it has given a breakout of a multiple barrier of 485 and adding built up of long position by surpassing its falling supply trend line on the daily and the weekly scale. So expecting further momentum in Bharti Airtel towards 540, one can buy with a stop loss of 495. And second trade, that is buy on Lupin. We are quite bullish on most of the pharma counter, including Dr. Reddy, Biocon, Lupin, Divislip. And this Lupin is backing higher highs, higher lows from last 5 trading session. The stock has managed to surpass its multiple hurdle of 800, 815 zone. So small follow-up can take it to 865, 870 level. So recommending to go long on Lupin as well with a stop loss of 800 for an upside target was 870 plus kind of levels.
All right. Gaurav Bissa is also joining in right now. Gaurav, good morning to you. What is it that you are viewing in terms of daily levels on the index, and what kind of a trade would you advise?
Good morning. If you look at the Bank Nifty, then there has been 3 to 4 rejections from levels of 9120, 9130 on the spot side. And today, in all likelihood, we are going to open above these levels. And if we sustain above these levels, then there can be some more upside towards the level of 9350 to levels of 9400. That might not be happening today, but eventually. And one will have to look at those levels or review at those levels how the index pans out. For Bank Nifty, 21 levels of 20,100 has been a very strong hurdle. Again, we can see a 300, 400 points up move looking at the Nifty index as well. But whether it is sustaining above those levels, that is going to be the real question. If it indeed sustains above levels of 19,900 to 20,000 on the spot side, then yes, there is some more upside that cannot be ruled out, and we can see the levels of 20,700, 20,800 on the Bank Nifty index as well. So both are looking positive, but then again, it depends whether the question would be whether one will be getting the entry level or not. If there's a 200 point up move in first 10 minutes, then I think one will have to wait a bit. It doesn't make sense to buy after a gap opening of 200 points, but then yes, overall trend would remain a little bit positive.
Okay. And what about stocks then?
The first recommendation today would be buy on CESC. If you look at the hourly charts, the stock is on the cusp of giving a good breakout. Some amount of long positions are seen getting built. One of the stable names in the last 3-4 days. One can keep a target of 520, play with the stop loss of 494. Second would be buy on HDFC Life, where we have seen decent accumulation happening. The name on the another stock to see a small breakout on hourly charts. One can play for targets of 500, keeping the stop loss at 470.
Those are some of the individual stocks you need to keep track of. I also want to focus on a few stocks. So now that we've got the extension of the lockdown till May 3rd, Ministry of Railways has cancelled all passenger trains. So this will definitely impact IRCTC. The stock which had actually started moving up, and you were seeing upper circuit after upper circuit. On Monday's session also, at a time when the market was down, IRCTC was up about 2.5%. What happens now, Pankaj? Are you tracking IRCTC? Aside from the fact that we spoke about aviation, what happens to this pocket?
So IRCTC, we don't have a coverage, so I will not be able to comment on that particular stock.
Okay, but nonetheless, this is going to have some amount of negative implications as well, because remember, most of them had been factoring in the lockdown lifting by the 15th of April, and now that gets extended by another 19 days. A few other stocks that I want to talk about. One, obviously, being the Moody's a downgrade on JSW Steel. They have reviewed their ratings, and the outlook has been revised to under review from stable. That's not auguring too well. And Motherson Sumi, some positive announcement there, saying in a press release that the company has not seen any change in contracts or programs. Most customers are wanting to catch up on lost production time in the coming months due to the pent-up demand. And production from China has risen to pre-COVID-19 levels. Pankaj, you track Motherson Sumi, and within the auto ancillary space, which is the best placed stock according to you?
I think Motherson Sumi, while the commentary looks encouraging, but our sense is that we still don't know the kind of challenges global economies or in fact various regions are going to face. So which is why I think the entire OEM space needs to sort of clearly avoided. I think ancillary space, sorry. On the OEM side, we've seen good amount of crack, especially in tier 1 names. So Honda was available below 10 time P multiples and with a good balance sheet. So we had recommended a buy on that. Then similarly, Maruti also is looking fine from the perspective that at least the balance sheet side is good. So I think the focus should be clearly on companies which have got good balance sheet in the auto side, because Volume-wise, you'll see a good amount of decline even in subsequent months. So pace of recovery is still sort of not very clear. I think the only way to sort of probably dissect auto sector is look at companies where the balance sheet is fine, where there cannot be much of a cash flow mismatch. So I think from that perspective, tier 1 OEMs look better, or in fact some of the battery players where you have a good component of B2C business. I think all those are relatively better players. I would still avoid most of the global exposure companies, especially on the auto side, whether it is a OEM or whether it is ancillary.
Pankaj, the other one that I want to talk about is Bajaj Finserv. We speak about Bajaj Finance a lot. Let's work with an assumption that the price damage is there and maybe the current year is a washout. But Finserv has come off because of one, Bajaj Finance, and two, almost all insurance companies too have taken a bit of a pullback. Do you reckon the valuation started in investors' favor because you're getting exposure to insurance and general insurance, as well as the potential upside of Bajaj Finance as and when it comes back?
So Bajaj Finserv is nearly 70% Bajaj Finance only in terms of some of the parts if you look at. See, the only comparison what we sort of do, say when you sort of compare is that say Bajaj Finance is also available at 3-time books, and you have a Kotak Bank which is also available at 3-time book. Now on the liability side, at least Kotak Bank has sort of announced encouraging growth in the deposit side. So I think from that perspective, that looks a far more better bet, because Bajaj Finance and indirectly Bajaj Finserv is still sitting on a good amount of 40 to 45% of unsecured book. Although they classify this B2C book as secured, but our sense is that in a challenging time like this book is not that kind of a secure book. So from that perspective, I think it is better to have look at tier 1 banks. And on the insurance side, I think you'll have players like HDFC Life or even SBI Life, wherein we had given a buy with a target price of 800. I think one needs to look at pure play insurance companies. I think those are better off in a current situation.
Okay, Pankaj, just a follow-up then. If you're willing to look at a Kotak Bank 3-times book, why not an HDFC Bank? I mean, I'm just trying to think versus the two. If somebody wants to choose, would HDFC Bank be better placed than Kotak or no?
What we have actually advised is that, banks have taken the maximum hit, and which is why HDFC Bank at 2-time book and Kotak at 3-time book is what one has to sort of look at within the finance space. One needs to sort of clearly ignore the NBFC as a space. So a cocktail of finance or banks plus insurance companies and consumption names with the staples or sectors or consumption wherein we'll see some bit of a pent-up demand is what we've been recommending. So HDFC Bank definitely makes a cut.
Neeraj, the other thing is, while we've been seeing SBI cards and how that stock has been faltering since the time it listed, diving deep into JP Morgan Chase's numbers, they had one of the biggest increases in provisions that they've taken, and that is coming specifically from the cards business. So that tells you this probably is not just a phenomenon that is being seen for our markets or the possibility of our market suffering because of people not being able to pay credit card bills, but it's a chunk of provisions even for US banks. So it is a big threat that comes about. And I want to talk about SBI cards with Pankaj as well, and as to what they see going forward. But I think we're just about a minute to pre-open, so let's stick with that, and then we come back to our market discussion. But the Stx Nifty, a pretty quiet start, slightly negative this morning. Looking at that, rest of Asia too has seen a slight bit of a cut. So Hang Seng is down, I think, 0.25% or 1/3%. You've got Nikkei 225 also trading in the red. Individual stocks will be in focus as we set up for trade this morning. But also, watch out for the fact that we have missed one day's trade at a time when the SGX Nifty was up about 250 odd points. So may actually cover up for that in today's session as well. So 30 seconds left to go. Watch out for Reliance. Watch out for, Bajaj Twins. Bajaj Finance was down 10% in Monday's session, whether or not there is any kind of recovery that comes back in. And then you have a few auto names, Hero MotoCorp, and there is the downgrade that has come in, and the stock could possibly react. And a bunch of other stocks, namely from the pharma pack, and how they start doing this morning. First few ticks should be up any moment now, and also currency 76.27 was the close on Monday Monday's session. Watch out for how we set up this morning. Open on your screen 9,200, almost there, so that's a 2.5% gain. Whether or not we hold on to it is another question, but a few stocks then. Sun Pharma up about 10% the first one there. IndusInd Bank is showing you a 10% pop. GAIL is up about 10%. Hindalco is up about 10%. HDFC Limited 5% higher. Titan, which fell about 5% on Monday's session, is recovering as well. HCL Tech is up about 5%. HDFC Bank is up 4%. That's at 931. Cipla, L&T actually, quite contrary to the rest of the larger cap good names, did well in Monday's session. It was up significantly. L&T Construction also has been winning a lot of orders of late. Bajaj Finance is up 1.5%. Vedanta, Bharti Infratel, Coal India, ONGC, NTPC are all up. The only few stocks, and I think only two stocks right now which I can see in the red. One is a Bajaj Auto, which is down 3.25%, and the other is Maruti, which also is absolutely flat. There's no major change out there. And I don't think there's any major change for the currency as well, Neeraj.
Yeah, there isn't, just wanting to see 2 or 3 names because these rates will settle down. But Interglobe Aviation is down 10%. Average Supermarts looks like starting off lower, so do watch out for that as well. And do watch out for ITI, BML and the likes, because those are looking like starting off higher. But we'll wait and watch. We'll wait and see what happens to these names before we talk more. Now, before we talk about SBI Cards, just a quick thought, because Vodafone Idea is looking like starting off in the green. I wonder if there are some positives for the telcos. I think Chandan Tapari had a long call on Bharti Airtel. Gaurav Bisai, I wonder if between Bharti and Reliance, you have a long call or a positive view on either of those two.
We have seen a move coming in Bharti Airtel already, but if somebody wants to play for a positional view, then yes, there can be some more upside. It can move towards the level of 535, 540. I will have to review at those levels what kind of pattern it is forming at those levels. But the crucial point is, as long as it is trading above the levels of 500, we can see there can be a stop loss, and on the upside 535, 540 is what I would be looking in Bharti Airtel. For Reliance Industries, it can go towards the level of 1300. That is coming as a vertical column on the point and figure charts, but the risk at these levels would not be that suitable. So for Bharti, you can have a 2% stop loss, but same cannot be set for Reliance, though the trend is positive. So in my opinion, I would go with the Bharti.
Okay. Pankaj Pandey, actually, just before we thank Pankaj Pandey, Devina, you wanted to talk to him about SBI Cards, but just wonder if there is a bit of a difference simply because the Indian consumer on the credit card side might not be as leveraged as the US consumer might, and one therefore hopes that things will not turn out to be as bad on the Indian credit card business, because otherwise HDFC Bank too has a spot of bother.
Yeah, and also the fact that penetration in the cards business is not as much in India as compared to US. They are way more in terms of the credit card penetration as well. So for them, if a bank has to actually provide for losses from the cards business, it will be much larger than India. But not to say that now with the kind of job cuts that could come about for the salaried class as well, that is a big concern. So how do they land up paying their EMIs and other consumer loans off? Even if they have card loans, how do they land up paying them off? And that is something that SBI Cards sort of spoke about in their update as well when they came out with it. But Pankaj, your quick opinion.
So I think we don't really have much of a history, but the only thing what we sort of look at is in 2008 when you had a similar kind of a crisis of confidence, the delinquencies in the credit card portfolio for a number of banks had sort of gone up. And which is where we are slightly more worried for SBI Cards, because what it will do is, one, your delinquencies will go up. There is a good chance also that the growth rates also might sort of taper off. My sense is that all that fear is not reflected in the current prices. So I would want to sort of avoid any kind of a portfolio which is sort of much more of unsecured side, whether it is in banks or whether it is an independent house under NBFC or a credit card. So from that perspective, I would still want to sort of avoid SBI Cards.
Okay, avoid SBI Cards. Pankaj, thanks very much for joining us. Really appreciate you taking on the time. Devin Choksi is joining in right now. Devin, good morning to you. We haven't really spoken to you in a while. turbulent times, unpredictable times rather, but it's almost becoming a game of ping pong with the markets now. You don't know which direction it'll tilt to the time you open. But what's your sense on the sentiment and the mindset of an investor right now, and whether or not they are in the position to take this risk of entering into the equity markets?
Yeah, good morning, Devina. You're right. I think the market is, playing ping pong at this point of time. However, when I look into the kind of a global market and see how exactly the situation is working over there, it is largely to do with funds coming into the markets globally. Last time, I think in 2008 and after, we had about the $900 billion worth of stimulus was given, and then we saw the effect of stimulus on crude, bullion, other commodities, and thereafter I think equity, which went on fire in subsequent period of time. I think this time around the stimulus package is probably 5 to 6 times more if you combine the entire globe. It's around $5.5–6 billion, I think, simply put. In such kind of a situation, if this kind of excess liquidity which starts entering into the global system, it would immediately, start supporting the global prices, including the commodity prices, equity prices, bond and currencies as well. So from that perspective, if you look at it, the real economy may not be in a great shape. I think, in fact, it is in a bear syndrome right now. But the more important part is that the funds coming into the system is basically driving the value up at this point of time. And that's where I think we are a little bit cautious at the same time. We are not against, the business potential per se, but the fact is that I think in shorter period of time, if this kind of fund comes into the system, it could drive the asset prices crazy in the near term. So a little bit careful. At the same time, I think looking at the potential in respective businesses, we'll look at the companies selectively.
Devin, just wondering, are you bullish on Reliance with oil doing what it is doing, not rising despite the deal or so-called deal, and telco revenues seem like moving up? Is this a good buy at current levels despite all the issues surrounding coronavirus, or you would leave it for the time being?
So I think the situation, Neeraj, good morning. Situation is not going to remain, forever in this kind of a period. Maybe as we hear, globally, the economies are trying to open up. America has indicated by end of April, it will open up. Similarly, will be the situation for selective other economies where things will open up. And when situation starts, opening up, maybe in a couple of months thereafter, I think we would see the normalcy returning into the system. And that's where I think the bigger call would be. Reliance kind of a company remains, in a strong kind of a format per se, largely because of, each of the verticals, be it industrial vertical or consumer verticals in which they are operating. They are relatively remaining quite strong as far as the potential and the outlook is concerned. Maybe in the near term, you might argue that yes, they have the trouble with selling of the product on the refining side. They may have trouble with selling of the product on petchem and polymer side. I think that could be the reality, but this is not going to be a permanent trouble. Maybe in a full 12 months of year, one could argue that around 2 to 3 months of business will be lost. Not entirely, but maybe in some greater percentage. I think that would be the argument which would go against, but that is a near-term outlook. Maybe I'm not worried about the long-term prospects of the business per se, as far as Reliance is concerned.
Okay, and they look like starting off well. In fact, as the pre-open rates settle down, viewers, all the Nifty 50 stocks are looking at starting off in the green. At least the pre-open rates seem to suggest that. The principal ones, though, would likely be Bharti Airtel, 4% higher, HDFC Bank, 3.5% higher. Banks actually are doing well because ICICI, Axis and IndusInd too look like starting off well. And last but not the least, Hindalco, 5.5%. We haven't discussed this, but Chandan Taparia, there is some news flow surrounding Hindalco too. I doubt, though, that is necessarily a big trigger in the near term considering the circumstances, but it's looking like starting off 5.5% higher. Would you trade it?
Yes, in fact, the Hindalco has negated its lower top, lower bottom, and we have seen bottom out process in most of the metal counter. The Hindalco, in fact, has been moving upwards from last 4 trading session, and supports are gradually shifting higher. Recently, it made the double bottom near to 85-90 zone and even the breakout above the same, and that's why we believe some sort of positive momentum can be seen. So now 110 could be support for the counter, and because of that support, the stock has potential to head towards 120 to 125 levels on the higher side.
Okay, watch out for those names there. But gentlemen, we'll be right back to ask you more questions. But we're just minutes away from market opening, and we need to tell our viewers all that they need to know to stay ahead in trade today. First up, Vipra is expected to report a muted 1% growth due to the coronavirus outbreak. The company is also expected to guide for a sequential decline in Q1 of FY21's revenues.
Carlyle, a key investor in Metropolis Healthcare, is looking to sell 13% stake at a floor price of 1,100 rupees per share. That's a discount of 17% to Monday's closing price.
Yeah, the stock's down 8% already at pre-open. Next, the private diagnostic firms may gain after the Supreme Court modified an earlier order allowing them to charge a fee for COVID-19 tests.
Biocon and Mylan have launched Fulphila, a biosimilar to Neulasta in Australia. It's used to treat cancer patients following chemotherapy.
Motherson Sumi System says it doesn't expect any change in contracts or programs once operations resume.
And HSBC hikes price target on Avenue Supermarts to 2,800 from 2,300, says despite disruption, FY21 is going to be a standout year for the company. Well, the stock's getting disrupted today for sure, down about 5%, 50% of the stores down, and the brokerage views are mixed, I would have to say, at best, at the very least. Devin Choksi, are you bullish on Avenue Supermarts, or would you, if you had it in your portfolio, you'd get out of it?
So, Neeraj, I think the valuation-wise, it is remaining at a premium valuation, and I think definitely, that would be the area where one would be really watchful. The opportunity in this kind of a market is that I think valuations do come down because of the general sentiments, etc. Per se, the business model is not doubted. On the contrary, I think the business model remains quite strong. And given the kind of digital foray that they have made, is only going to grow stronger from here. So from that perspective, any correction in the prices which makes valuation more attractive, definitely I think it's an opportunity to consider the stock into the portfolio. Up till now, I think it has remained on the expensive side. If I think it becomes moderate, then probably I think it would be an opportunity to buy into the portfolio.
All right. Devin, what's your sense on what happens to some of these retail companies? Now, at a point, a stock like Trent was considered to be a really good pick within the mid-cap pocket with consistent growth rates, same-store sales growth, almost 12%, I think, for Westlife. That will definitely get dented. But at these prices, is there any case for investment?
So not completely sure at this price, I think, to look into the companies like Trent for the time being. Largely because I'm not worried about, I think, the demand returning back. I'm not worried about, I think, the situation getting normal at some point of time. And I think given the situation, we might probably also see a couple of months of washout performance, financial performance in of the company. That is something given. And that's where the market is almost discounting each of these negative news. What I am more particularly interested in knowing would be how exactly the consumer is going to be behaving hereafter. The behavioral pattern of the consumer for consumption is going to be very interesting thing to watch. Yesterday, I was, I think, working on some of the global players, including Amazon. And I think interestingly found out that in this situation, the amount of deliveries have picked up for companies like Amazon. And suppose if I think that trend is to be believed, then in each and every consumer verticals, I think the consumption would probably take place, would be, I think, on the digital platforms. And that's where I think one will be interestingly watching as to how the store format will work along with the digital platform hereafter. So that is an area where I'm not completely sure. I think we'll have to see how the behavioral aspect, I think, takes over post the lockdown is opened up. And then probably one will have to think more about this subject. Not writing off the store format per se, but would like to think that there will be some different ways of working which will converge the digital versus the physical store formats for retail. So let's wait and see how exactly the behavioral aspect comes out.
Okay. We're just closer to a minute from market open. We'll come to you, Devin, in a bit. Let's also get in some top trading ideas for the morning. Come to you first, Gaurav Vissa. What's your top call for the day?
I think I'll go with CESC, the kind of breakout it has seen, and we can expect levels of 520, 525 today. One can now, it's opening with a small gap up node. One can keep a stop loss of 498 now and play for 525.
Okay, Chandan, stay on. We'll take in your top call post-market open because we are very close to doing that. So we'll do that in just a moment from now. And then, of course, maybe take in opening thoughts on the index as well, because we're likely to start off a couple of percentage points higher in trade. Okay, we have started 2.28% higher for the Sensex, 2.199187 for the Nifty. So in line with what the SGX was indicating. Banks are not doing all that poorly either. Let's wait and watch if these gains last. All Nifty 50 stocks in the green. Hindalco, HCL Technologies, Axis Bank are amongst the principal gainers. HCL Tech is back to 473. The gains in Shree Cement today. We'll hear the management in a bit from now. I think at about 9:30, 9:35, we'll get in Shree Cement to talk about as well. So it'll be interesting. Bharti Airtel continues to rise and shine. Now it's back to levels of about 530 odd, 526 to be precise. So not a bad start for Airtel either. But IT seems to be starting off okay. Now Maruti Suzuki, despite RC Bhargava was saying that once the COVID-19 lockdown is over, we'll come out stronger for autos. The stock starts off lower, presumably on the fact that the lockdown has gotten extended. ONGC marginally off in trade. Cipla takes a bit of a breather, so marginally in the green, but nothing too dramatic. And Z, while it was showing some signs of positivity in the pre-open session, starts off negatively today. Do watch out for the banks, the likes of HDFC, Kotak, ICICI. All of them were showing some promise, but save for ICICI, the others seem to have cooled off a little bit in the session today. Devina, what about the broader markets?
Well, a few of them doing well. So, the last two or three sessions on the back of a deal, ITI was up. And today also it's up about 10%, which takes its last 7 days tally northwards of 50%. Gains coming in for ITI. The other one is Stake Solutions. This too has been up 10% today, and its last 7 days performance takes it higher by 45%. So some of these mid-cap companies have been doing really well for themselves. MTNL today is up 10%, smaller name, but nonetheless adds on weight. And Glenmark Pharma today is up 8%. That too, along with Spark, that's up about 6.5%. Spark has been up 50% in the last 7 days. Vodafone Idea today is up about 6% as well. You've got a GSK Pharma, Wockhardt. So again, pharmaceuticals is the focus point. Then you've got Future Lifestyle. That is up about 5%. Remember, Future Group, entire Future Group, Future Lifestyle, Future Retail, Future Consumer, everything has been beaten out of shape, and now that comes back. Sadbhav Engineering is up about 5%. Then you've got the likes of Thomas Cook, smaller name there, but doing okay for itself. And then a few of these diagnostic stocks. Metropolis, obviously, with Carlyle selling out at a 17% discount to Monday's close, that the stock has been pulled down by more than 10%. And the other diagnostic stocks, though, on the relief by the Supreme Court that they can actually charge for COVID tests from the wealthy, only free tests for the poor. Those stocks, Dr. Lal-Path Labs, I think Thyrocare, they're going to be in focus as well for that. Amongst the losers, Rampuccini is down 5%, Renuka Sugars is down 5%. Aviation stocks again take a knock, so the Interglobe Aviation is down about 3.7%. Irctc, now remember, extension of the lockdown, they've cancelled all the bookings, refunding customers. Irctc is down about 5%. And then you have an Avenue Supermart that continues to look slightly weak, though you have HSBC upping the target price on this one to 2,800. But at this point, there are some pain points there. PVR down, Oil India down, Inox down. These are some of the losers in the session.
Yeah, well, interesting start to the trading day. Metropolis Healthcare is down 12.5%. Keep that at the back of your mind. India VIX sub 50. Chandan Dapadia, to you first. Your top call for the day today, and your thoughts on open.
Yeah. So first, talking about the opening thoughts, the market opened positive, made high near to 9200 zone, given a gap up opening by giving the narrow range breakout. So I think the setup is positive. The support which was at 88 is going to shift towards 9050 level. So I think with support of 9050, one can look for an up move towards 9300 kind of levels. And trading ideas, again, to trade Bharti Airtel and Lupin, and I'm comfortable when both the counter. Bharti made the high near to 535 and again turning lower. So if it comes near to 510, 505 zone, one can buy with a stop loss of 495 for an upside target towards 540 level. Lupin looks good. Here also we are witnessing some up move for a target towards 870 level. And apart from that, I have 2-3 counters on radar. There is the Pidilite and Kotak Bank and ICICI Bank. One can even look at the same, and I believe the good day would be there for the stock specific action today.
Okay. The stock in focus is Motherson Sumi. It's now up about 6% in trade. Really strong start, simply because of all that, companies are saying. My Morgan Stanley, I think, has said that because the parent has paid the part of the debt, Motherson Sumi Systems, so some other Mandana, and the promoters own about 35%, and the pledges had come off now to 19% of the promoter holding, and that's why it is doing very well. What are your thoughts, Gaurav Visa, on Motherson Sumi as a trade?
Well, if you look at Motherson Sumi, there has been a very strong hurdle at levels of 67 to 68, and one will have to wait for the stock to settle at least for an hour above these levels. If we have an hourly closing above levels of 67, 68, one can keep a stop loss of around 65, and on the upside 73, 74 is what I would be looking at. So I am positive, but let it sustain. It's already up by 8%. So let it give a hourly close above 67.
All right. Remember, Motherson Sumi also has given you the positive update where they've spoken about all the pending orders that are there in the system, and clients are actually waiting, and they've lined up as soon as production starts. That pent-up demand will kick in, and also the fact that the production levels from China are back to pre-COVID-19 levels. So all of those factors kept in mind. For Motherson Sumi doing what it's doing at about 8% higher this morning. What else? Z for one, and its sugar box deal, 3.5% lower for Z. Devin, what have you made about Z's acquisition and in such times?
Well, I think certainly investors don't like, certain amount of OPEC transactions. And that's what I think the stock price is reflecting into. I think the punishment has come largely on that front, because I think these kind of OPEC transactions are not working good. Maybe I think the corporate promoters and the management needs to, explain in detail as to, what are the strategies behind, acquiring such kind of companies, and where exactly they see the rationale. Maybe at some point of time, I think they will have that clarity, they will part with it. But at this point of time, it is not there. So maybe the stock is getting punished because of that. Nothing more to add, at least at this point of time, since I think not much of information is available on the subject for discussion.
Okay. The other one being the fact that, now TRAI has said that you can look at using the same, you can change your set-top boxes, just the way that you have number portability for telecom. Does this have a significant impact for any of the distributors there? Because, selling set-top boxes also forms a major part of businesses.
Yes, I think to an extent, definitely, it will help. But again, I think the mute question, and then as we seen in case of telcos also, the MNPs definitely, I think, is an important element, and I think it is helping companies like Bharti in current situation. The loss of Vodafone Idea, I think, the gain of Bharti is right now happening. Similar situation could happen, I think, into the set-top box business as well, going forward, where I think the service provider, I think, would probably get a preference in a good situation. So from that perspective, yes, the argument stands tall that yes, I think some of the companies which may probably, I think, find themselves on the receiving side of the business, and the stronger ones, I think, who have got a larger amount of footprint and better ability to bargain from the channels, I would probably think that they would have relatively better terms to offer to their consumers. So yes, I think that could be one of the reasons. But honestly, I think, again, this particular point of time, I think one can't be conclusive about the numbers as far as I think the impact goes on this particular subject.
Okay. Gentlemen, all of you, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time.
Thank you.
Well, as we speak, I think Motherson Sumi is the star of the morning because of various reasons. Now it's up about 10%, so really strong show. But the market's not doing all that bad, holding up well. Hindalco is your principal gainer, and UPL2 bounces back. Amit Khurana of Dalat Capital joins in right now with his thoughts. Amit, good having you. Thanks so much for joining in. You guys do a lot of analysis of how the flows are looking as well, and what would they indicate based on the derivative positions and otherwise. What's your sense, Amit? This pullback rally, will it fizzle out soon? Is that the call that you're giving? or are you giving it the other way?
So Neeraj, just to put that into context, while 2 weeks back when we had a bad week, the first week of April, we were of the view that the selling was not sustainable because the volumes were not supportive and the positions were clearly indicative of a move up. That move up was essentially targeted at 9,400 to 500 range from our derivatives desk, which seems to be playing out reasonably well. Now, this week essentially becomes crucial to see whether this is sustainable based on a few lead indicators. One, the market has more or less discounted the extension of lockdown and therefore it is moving beyond that. The second will be what is the response of the government that we get to see in terms of a support package. I would not call it a stimulus package because we are essentially looking to support the economy rather than stimulate the economy. And third, very important, at this stage, what we are finding is the FIs are turning selective buyers. So what does that sustain, and do we revisit our next target, which is closer to a 9,900, 10,000 range, is how I would put the tactical positioning for the market to be. Whether we'll get to that those levels, whether this will sustain, I think this week will essentially be the test case for that to play out.
Okay. Amit, is this tactically a good time to still go out and buy into pharma? Is this a move that we should be afraid of because it's played out a lot already? Or is it a really large move and therefore we are probably in the initial stages? How are you guys analyzing it?
Yeah, that's probably the most discussed aspect in our internal meetings. I think I would put it like this. What we are seeing right now is a serious realignment of portfolios across domestic funds, the larger HNI investors, and the FIs. We're very clearly going to see the BFSI space lose its weightages in these portfolios for the medium term. And that will get reallocated to some other sectors, including pharma. And therefore, these sectors, stocks will continue to get incremental flows. Every dip will tend to be bought into. Now, this obviously doesn't imply that you go and buy everything in pharma. I think it will have to be assessed at individual company level, the models that you want to sort of get invested into for a medium term. But yes, directionally, it seems to be far better placed. And also, you have to understand, these are so under-owned sectors. Over the last 4 or 5 years, some of the pharma names have lost 60-70%. That the valuations have also started looking attractive in a few cases which are more domestic-led models. And therefore, we're seeing the kind of sharp uptick. Now, whether it makes sense to allocate money right now or wait for corrections, there are really no easy answers to that. But if one were to take a medium-term view, pharma, I believe, will keep gaining in terms of weightages in the portfolios for the domestic investors and FI investors. And therefore, with that, one can go around buying a few businesses here and there.
What happens to IT earnings as we kickstart Q4? Amit, so what have you factored in?
Well, our take is that Q4 will not show so much of an impact on the earnings per se. I think the bigger impact will be felt in Q1 and Q2 based on our conversations with the corporates and whatever we've been talking to the other stakeholders in the sector, the key clients who are sort of getting their engagements outsourced from the Indian vendors. So usually Q1, we usually see a flattish to a -1% to -2% kind of quarter-on-quarter growth. We think this could be much sharper in Q1. So I don't think Q4 is as much of a concern, and really the market is also really not as much bothered about the Q4 numbers. The more important part is what is a commentary and what is the qualitative assessment of the visibility for the business for Q1 and Q2. Obviously, it will be quite, shall I say, significantly impacted. But we have to see as to which pockets show us signs of sustaining or holding on, and which pockets show us a major contraction. But very clearly, Q1 and Q2 will be more impacted than Q4.
Do you believe, Amit, that Avenue Supermarts can be an outlier in this turbulent period? While we have been seeing comments coming in from them too, suggesting that 50% of their stores are shut, but the street believes otherwise. Valuations are still heady. They've not yet reflected the comments of the management themselves. But is it the time to look at Avenue Supermart, keeping in mind its historical track record?
Yeah, and that is exactly the point, that they have been able to sort of sustain much better returns on their capital. And in the environment that we are, the basics are going to be more predominant in the consumption theme than the discretionary and the luxury products. So to that extent, the balance sheet for Avenue Supermarts remains one of the better managed balance sheets. Now, in this situation, really the valuations are not playing as much of a role for sectors wherein the money managers believe that the capital is relatively better, invested versus some of the other sectors wherein you have a risk of solvency or balance sheet stress. So I think we're in an environment wherein either people want to be in cash or they want to be in models, however expensive they may seem to be, just to be sure that I'm in the right balance sheet model. So to that extent, names like these will get a fair amount of fund flow. And our view is not very different. There will be a reasonable level of strength in some of these models to play out. In fact, it will be probably more pronounced now in this environment. Names which are able to establish their delivery, names which are able to satisfy the consumer needs will probably have far more stickier clients in the future.
Okay. Amit, one last question. It's obviously difficult to come up with conviction idea in these times, but not difficult to probably pinpoint something that you're closely watching that could be a potential investment idea if things start to improve. What is that potential investment idea according to you?
Well, very, very difficult to say. I would probably put it more on the sectors than on individual ideas. So one of the things which we believe even more convinced now is chemical space. Very clearly, Indian vendors will stand to gain. And we believe that is the one to look out for. There are various models in that. We can probably discuss that in greater detail in one of the other conversations. But that is one particular area I would highlight. And very large companies to play around there.
Okay, that's specialty chemicals there. Amit, thank you very much for joining us. Really appreciate you taking out the time this morning.
Sure.
All right, and I think that's just about the time that we have here on Indian Open. But before we wrap, just want to quickly take you all through the latest numbers, the coronavirus update that we've got this morning at 8 a.m. So the total number of confirmed coronavirus cases now stands at 11,439. Active cases being 9,756, while the ones that have been cured or discharged or migrated stands at 1,306. Total death tally is about 377. That means there have been 1,076 fresh COVID cases and 38 deaths, along with 270 recoveries in the last 24 hours. So probably the silver lining out there would be the number of recoveries. But Neeraj, the market's still for the session holding okay.
Yeah, so far so good. Let's see if this lasts, but it'll be interesting to see what happens during the course of the day, particularly Devina, to the financials. They are now underperforming or lagging the Sensex and the Nifty from starting off much higher. So let's see how it shapes up. But that's all that we have the time for on this leg of Indian Open. From Devina, me, and the team that put this show together, thank you so much for watching.
The union to secure your future is here. Andhra Bank and Corporation Bank are now